one of the things that you have to determine is which one of the periods are you the best. There are four I want you to be aware of. Let me just go with this for a minute. Four periods, right? So you've got the open. You've got like the hour or so. You got the 90 minutes or so after the open. So I would say that's phase one. So the open is an animal all by itself. Then you have the midday doldrums. That's phase two. And then, of course, you have phase three. Now, you can do phases 1 through 4, and you say the phase 1 is the open. Doesn't make a difference. But I would say this is 9:30 Eastern. I can only think in New York right now. Let's call it 10. And then you've got 10 to 11:30. And here you have 11:30. Let's say this is to 2:30. Now these are general, like it's not like right at 2:31 things start to change. No, it's general. It's a guideline. And then you have the close, which is 2:30 to close. And so you need to break your trades down into these phases. So where are your best trades coming from? You might find out, like, look, 85% of my losses come from the open. You might want to go back to the drawing board in the open and relax trades at that time, not abandon the open. Play on paper a bit, but start to play in the zone that you seem to be better at. And when your paper trades, the trades that you actually don't press the button with, but you write them down, when the trades on paper start to outperform the trades not on paper, then that's a signal that you should go back and start the open again, and vice versa. All right? Now remember, this is the period that gives traders the most trouble. All right? So let's say be very careful here. And this is the sweet spot. If you can tie these two together, this is a nice career right here. All right? And of course, if you can't play any of those due to time restraints, a job, or whatever, the last 90 minutes is a great time to trade as well. So basically, I used to generally tell traders, trade the bookends. What are the bookends? You know how there's these book statues that hold up a stack of books? Well, the bookends are first 90 minutes, last 90 minutes, generally speaking. And the middle is where a lot of traders get into trouble. But some traders are outliers. Some traders are different. They do better in the middle. So these are only general guidelines to start with. You've got to let your own experience be your ultimate teacher. I was talking about that earlier. I lead you to your real teacher, experience. I'm the guide that takes you to experience. Experience takes over from me, and then I go grab the next group. Right? Once experience has emerged, once you have enough experience for experience to gain its own voice, you really don't need me very much. Maybe for some motivation, maybe for some occasional reminders, but experience for the most part will take over, and your experience will show you what's right and what's wrong. Now, in the beginning, you don't have that experience, so you need a guide. You might not ever get to your real teacher experience if you don't have a guide that gets there, because If you incessantly do the wrong thing in the beginning, you can do so much damage to yourself that you will never, ever make progress. That the wrong thing can get so deeply seated in your DNA that it's impossible to reverse. And this is very sad. I was explaining earlier that I used to be very careful about what I allowed into my system. I used to be careful what I read. I used to be careful who I spent time with. I used to be careful about what I studied. I used to be careful about the movies I watched. I did not want garbage in because I knew what that meant. That was affecting my future with garbage out. So you have to really honor the beginning phase. You have to honor it at trade by trade without being obsessive, because you can't be obsessive where you're trying not to lose. The object has to be, I'm going to win and I'm going to lose, but I'm going to gain experience right now doing both. That's the mental switch that you have to make. You can't become a master if you don't experience both sides of the equation. You can't become a master if you haven't been brought to the breaking point, if you haven't cried, if you haven't been spanked, if you haven't wanted to quit. These things are necessary. All right? Okay, so Hawkins says the open is the most difficult, the second is the most interesting for him. All right, good. That's called more of a pullback trader. So a pullback trader, which I was for years, guys, a pullback trader is this. Let me see if I can get some space here. So here's a pullback trader. Stock moves up, you let this go. And then you see how it pulls back. If it stays in the upper 50% of that pullback, and it doesn't start violently here, how something starts is important. So if the pullback doesn't start with something violent, it's a rather normal, natural pullback, not a violent collapse. All right? And you get something powerful that you know here. This is a great trade to see how many gives you that second leg that moves to new highs. All right, here's another one. Here is the pullback that doesn't stop at 50. And it goes back to support, let's say something like the 200. If there wasn't something that started off violent, this wasn't a real collapse. If you get something strong here, you can try a 200 period moving average pullback play. So you got these two scenarios. And there's different ones, like a third pullback, not a 50% pullback, and so forth and so on. This one, your target is no longer a new high. It's more like up here. This target is the new high. And so a pullback trader focuses largely on these two scenarios. But the key is that they must have something that gave them a very nice, fluid, solid move, initial move. And I was this type of trader for a number of years. I waited for the market to show me strength up and down. This works down too. And then, so if I had 10 stocks, which ones had solid green moves to the upside? Which ones had solid red moves to the downside from good locations? Now, out of 10, maybe 4. Now I'm down to 4 stocks. Now, of the 4, which ones are pulling back normally, not violently? Maybe one's violent. Now I'm down to 3. Which ones give me a beautiful elephant bar or bottoming tail bar or something I know right at or near a retracement level like 50%, a rising 20-period moving average, a flat 200-period moving average? And that's being a pullback trader. You're letting the market first reveal where the institutional money is interested today. And usually, they're not just interested once that day. They let the stock cool off and they get interested again. That's what creates your second legs. All right? Does this make sense?